Well, good morning, real estate fans. It's Alice Lema and Pete Belcastro here on KCMX News Media 880 with the Real Estate Show Oregon. And we're here today to talk about all things real estate in Southern Oregon. And boy, what a week it's been. Pete, tell me what's going on in your world.
Well, first of all, we got to say what we're doing. You're in one location and I'm in another location. We're doing our thing that everyone has been, forced into, is self-isolation, and stations are closed and all sorts of things have changed. So I'm at my home office and you're at your home, and we have a guest coming up later on, Guy Giles, who's in his office. And so we're going to try to do this thing very, I guess, kind of say new agey kind of thing, new age real estate, we'll call it.
And isn't this great though? The radio show goes on. The show goes on.
Yeah.
We're using Zoom, and we are all connected through webcams, and we
Sure
can
are.
have our safe distance in keeping away from the coronavirus. But we still have a lot of real estate updates.
Well, if people thought that, and you were right, I have to say, last week again, you were right on. I thought it was just going to kind of take a tumble, but it actually hasn't. There's still a lot of activity going on. We've got some great stats to share with you. This is what happened last week in the 3 counties. But on the other hand, while that's kind of good news, Alice, there's also some clouds kind of hanging out there. So there's a few clouds out there. We're going to talk about that later. Also, what's really cool about today is Guy Giles, who's our guy from Mutual of Omaha Mortgage, is with us. And we're going to talk with Guy in a little bit, because right now you'd say that what's happening with loans, that's the big thing. Their rates, what are they doing? Who's out there? What's going on? Anyway, Guy will be along a little bit later on, and we'll hear from him. I'm sure he's probably pretty busy because it's not only loans going on, it's got to be a lot of refinancing. And we'll get an update from Guy on that. We can't wait to hear what he's got to say about it.
Well, and the coronavirus pandemic is causing multiple layers of trauma. We want to send out our love and prayers to anybody who is infected or has a friend or family member that is. We're all doing our best here in Southern Oregon to keep safe distances, keep things clean. We have very strict protocols now, and we are still listing homes. A lot of listings came on the market, and we have had such a shortage for such a long time. I think that is creating some of the volume. And then we've got all these tenant laws. We've got all these Governor Brown directives that are causing some interesting things. And we're going to have to talk to Guy Giles about lenders with real estate and tenants.
Yeah, and there's also things like if you have a bank or you have a mortgage, you might check with them regarding maybe paying interest only on a loan for 6 months or other things like that, because there are ways to help you get through this. And we want to make sure that people have that opportunity, because I know several people already, Alice, have taken advantage of these things. They've called their lenders, they've called maybe their credit card company, whatever, getting ready for this, kind of get it a head start, because you don't want to be the last one in line. You want to be first in line. And that's what we're really here to tell people about. So we'll see how that goes. But I can't wait to hear what Guy's got to say, because there's so much happening. The market is so different from what it was just a few weeks ago. We'll hear what he's got to say.
Yep, and we'll be right back, and we'll talk to Pete Belcastro and Guy Giles. I'm Alice Lema at the Real Estate Radio Show. And welcome back to KCMX News Radio 880, the Real Estate Show. I'm Alice Lema with Pete Belcastro. We're both brokers at John L. Scott, Southern Oregon, and we're here to talk about everything real estate in Southern Oregon, and we're doing it remotely so we can practice our safe radio. And today we also have Guy Giles from Mutual of Omaha, our in-house lender. Guy, how are you doing?
Good, just still busy with a whole lot of refinances and future refinances, what I've been dealing with a lot more ahead. A couple purchases, get a little bit shied away, until this thing's over a little bit, but for the most part, still pretty busy.
So that's a little bit of a surprise, isn't it?
Yeah, I mean, it is definitely a little bit of a strange market. People, I don't think anybody's super worried that this thing's going to last forever, but everybody is, a little bit concerned with just right at the immediate future, if they're going to get laid off for a few days, or, nobody wants to buy a house and then have a job loss or something right over their head. So for the most part, though, people are following through, and I've had my house through the biggest crash since the Great Depression, and it's worth 3 times more than it was the day I bought it. And it's a long game. It's not a let's buy this house and 1 month from now take a look and see where we are.
Right, and
So,
everybody needs a place to live, and if you can withstand the bumps and twists and turns right now, you can get an amazing rate. Can you talk to us about what's happening with interest rates right now?
well, interest rates, believe it or not, have bumped up just a little bit, and
Really?
yeah, a lot of. I mean, I'm still quoting in the mid threes, so they're not bad. But I had people on refinances I was locking in as low as 3% on conventional loans a couple weeks ago. The big problem kind of comes in where if somebody does not make their first payment, whoever is servicing the loan, they end up having to make that payment themselves. So if everybody thinks, hey, if I go to Chase for my loan or the credit union for my loan, that person is the person giving you the loan. They're the ones that are generating the loan, but Fannie Mae and Freddie Mac own over 90% of the loans out there. And you're basically a servicer. You pay generally about a 1% fee for the privilege of servicing that loan, and your return is about 30 basis points. I don't expect that to mean a lot to a lot of people, but it takes about 3 years for a loan to kind of pay itself back. So what everybody's up against right now, as as loan originators and just everybody in general, a lot of these things are getting paid off, and if you're losing money on that, you have to kind of hedge a little bit against that. So there's just a ton of things going on
So
right
are
now.
you saying that if someone misses their first payment, their lender / servicer has to pay it?
That's correct. Yeah.
Wow. So what happens if that happens in mass?
Well, then you lose your credit lines and your ability to loan. One thing that's kind of nice about where I am is we're very liquid. We just put a ton of money aside, so we're able to keep on loaning. But consequently, everybody is trying to be a little bit more careful, especially with the FHA loans. Their rates have gone up a lot. They're talking about possibly not having to make a payment for a year, and then in that case, that servicer would have to make those payments, and it could literally make them insolvent. That doesn't mean that we're going to lose the lending industry or anything. It just means that the government, they always have good intentions, I think, when they do something, and a lot of times they don't think it through, and it's just one of those deals that's created a lot of liquidity problems for servicers. Again, we have positioned ourselves where we're not running into trouble that way. There's a lot of companies that are not doing refinances anymore. I know of a couple of them that will not let you lock your rate until you are cleared to close, meaning that everything's done. If you need an appraisal on the house, that's done. Your underwriting, everything is ready to close, and then they get to tell you what your rate is. So
See, they're
it's
trying
not
to
a real.
lower the risk for themselves because
Yes.
they're just trying to be preventative, right?
Yeah. Yeah. They don't want a whole bunch of loans floating out there that everybody's shopping. I mean, again, we are not doing that. I do need to see your credit documents and everything, which is something that I've been doing all along anyway, before I'm able to lock it. But we are able to lock a lot earlier than people out there. But this will get resolved. They said it's something that Ben Carson asked for a report on this last Thursday, and it was supposed to be turned in on Monday. And literally, they're dealing with it with a bunch of the FHA. That's really the biggest one right now.
And Ben Carson is part of the current administration cabinet. He is the Secretary of
The
HUD,
Yeah.
Housing and Urban Development. Sorry, please go ahead.
Yes. Yeah. So anyway, not to get too far out on a limb, but really we had such low rates that everybody got buried, and the Fed is actually backing off just a little bit, buying these mortgage-backed securities, and that's what our loans are really traded on. Everybody thinks that when the Fed lowers rates, that mortgage rates go down, even though they generally kind of walk hand in hand. It's not a direct result of them lowering the rates. These guys stepping in and buying the mortgage-backed securities is what has actually helped. I don't know if I've lost you. Oh man, back to my train of thought if I had one. Anyway, great.
Well, that's okay. So I wanted to ask Pete to jump in because he's been doing some interesting research on our local stats as we prepare to see what the impact is on our community. So Pete, what did you find out this week?
Well, no, the first thing, before I do that, I want to ask Guy one question though. What if what's happening to people who are already, say, I've been pending, or I've got a loan with you and my job has disappeared now. Are
Yeah,
those
because we've had
pending
that
sales going
happen.
to continue on while someone is in this situation, or are they going to just drop the loan? And what happens? I mean, they
They
get their
are
money back, or what situation is that going on with that? Because I'm here, it's got to have some effect somewhere.
they are doing verifications at the end of the loan, like they always have been. And if you're affected by this, yeah, it will affect your ability to close your loan. They're trying to have some workarounds around this, because all the people that are generally answering the questions, hey, do they have a job still? Which is
Right.
something we've always done. They're asking them, just right before closing, if this thing has affected them. And yes, it can absolutely affect your ability to get a home loan right now. So, that's something you need to be really careful of if this thing happens right in the middle of your transaction on refinances or purchases.
So refinance or Alice, has that happened to you yet?
Yes, we had very early on a gal just 8 days away from closing, and she was told that she was going to be laid off. Actually, she was told she was going to be furloughed, which to her, she thought that meant I'm going to be out of work for 90 days, but I'm coming back. And her lender said, I'm sorry, we're pulling the plug.
Well, it's obviously going to happen. And again, if you're in that situation, it seems like you're just stuck, right? You can't do anything about it until you get back to work then.
Pretty much, yeah, pretty much. I
Okay.
mean, to be honest, any of them that I've had fall out weren't even that situation. They were just, somebody was like, hey, I just want to see where this thing's going to land a little
Oh,
bit.
you
Maybe I
mean
can
they
get.
got nervous?
Yes,
They
yeah.
got nervous. Okay. And so they were allowed to cancel their loan?
Yeah, they're making provisions for that also. I mean, it's again, all the rules aren't written, but if you have an appraisal sitting out there, somebody has to pay for an appraisal. Somebody has to pay for that. And I've just been kind of treating it like, hey, pay for your appraisal, and then I'll pay for the one when you get back in contract. Is what I did with the gal today.
Oh, God, that's so,
And
see, we got to be kind to each other during this time. So
yeah,
Pete, what do you think
Well,
this is going to do to our contracts? Like when
well,
you
there's
have a
already
contract
changes in
with
the
buyers and
contracts.
sellers.
There's COVID-19 addendums now that are out there, so everybody's aware of it. And it seems like a person could get out of a deal pretty easily by just claiming you lost your job, you lost something that related to this, because it's affected so many people. But hopefully there wasn't that. Hopefully not that many of them maybe were in that situation. I'm just curious, Guy. You're so busy with this. And are the buyers coming that you're seeing with out-of-state folks right now, or are they local people? Because the movement has been so restricted in and out of our communities now.
a ton of people pre-qualified. I don't have a ton of contracts coming in right at the moment. I got
Okay.
I got a couple this week, but literally they're coming in a lot slower. I mean, as far as people moving from out of town doing things, I think they're a little paralyzed because you can't see a house right at the moment. You're
Well,
just,
actually, that's not true.
I was
well,
going to say,
I do
Alice has
I do
made
little
some
videos.
progress on this, haven't you?
Yeah, a lot of us have. A lot of us have. So,
And
but please continue making your point about what's happening to your quantity or pipeline of loan applications.
Yeah, I mean, it does feel like it's down a bunch. A lot of people, again, still inquiring about refinances, and I'm kind of prepared all them. I just always look around for a good day to lock, and I'll lock them. But I do the same thing with my purchases also. And
Well,
I
that's got to make buyers nervous though, because they're trying to get the lowest rate possible.
well, and that's again what we're trying to do for them also. Again, the Fed stepped back on buying mortgage-backed securities, and so our rates have gone up a little bit. Plus this thing with the liquidity on the FHA deals. So I'm not a big gambler, but at the same time, there's the rates are up a little bit right now. So I'm not getting in a big hurry to lock people this week, and you know, I always leave it up to them. I let them know exactly where we are, and people kind of have in mind what it was a week and a half ago. So it's just,
Right.
you know, I mean, either way, rates are really good right now, and you might even find a good deal on a house because there is, like you said, there's a lot of listings coming up, and it
Yeah.
might be the perfect time for you to
It's all
buy.
supply and demand, right, Pete? It's all supply and
and
demand.
that may be the biggest surprise of all, is the number of listings that have come on. even we've been in a 3-week lockdown almost now, and the number of listings really hasn't declined very much, Alice, which is really surprising.
Yeah.
But there are some signs that it's changing, and we'll get to those in our next segment. But no, people are still putting their houses on the market, and it's not just lower price ones. I mean, it's really the whole gamut of price ranges that are coming on.
Yep, every price range, but it's way different. The how to put your house on the market is way different. So we're going to talk about that.
Way different.
The marketing is way different. The showing is way different. And so we're going to talk about that in our next segment when we come back from our commercial break. But I just wanted to say thanks to Pete Belcastro from John L. Scott and Guy Giles from Mutual of Omaha for getting high tech really quickly so that we could still have the radio show be broadcast from our remote locations. So Pete Belcastro, Alice Lema with the Real Estate Show, and we will be back shortly after these messages. And welcome back to the Real Estate Show, Oregon. I'm Alice Lema, broker John L. Scott, here with my friend Pete Belcastro, also principal broker John L. Scott, and Guy Giles, Mutual of Omaha, our in-house lender. And it's been a really bumpy week for a lot of people. A lot of people are home, and we have interesting side effects of the corona pandemic here in Southern Oregon on many, many levels. Pete, I wanted to talk to you again about some of the stats. We had some interesting trends bubbling up, don't you think?
Well, there are, Alice, and as we said in our last segment, that activity seems to have slowed down a little bit in some areas. I will say the biggest change to me was when we looked at, the number of lock boxes that are opened by real estate brokers in Jackson, Josephine counties, and we've had upwards of 11,000 in a month. Okay, that's a lot. This last week, which really started as we've started because of the changes that have gone on, there was about a little over 200.
200.
So that would equate into maybe 1,000 a month, Alice, which is like a 90% drop maybe from the height.
In just a few weeks.
In just a few weeks. But on the other hand, those 200 that are out there looking, I think, are pretty serious buyers. They're actually are buying because there's still pending sales going on. So those that are out there, the people that are opening these doors right now, there are some pretty serious buyers. So don't think that just because the grand number is down, that nobody's out there. You can attest to that yourself, right? You've seen that.
It's more concentrated. So when people are going out and looking at houses, more of them are writing offers, and more of those offers are getting accepted. It's a and this was a little bit of a surprise to us because we weren't sure how it was going to affect our sales and our listings here in Southern Oregon. And
well, it will do it though, Alice. It's going to do it here. But here was this last week, and we've been following that week after week. There were 70 new listings went up in Jackson County, 26 Josephine, 16 Klamath. But the pending sales have dropped. That's been the biggest change right now. We went from about 90 2 weeks ago to 55.
Wow.
This last week.
That's half.
So the pending sales have dropped. But the most amazing thing in the terms of the number of sold properties, in all 3 counties, all 3 of them, had the highest median price sales in 1 week that we've seen all year. $360,000 was the median price in Jackson County on 63 sold properties. That's remarkable.
Well, and that's quite a bit higher than the national average, which the national average is right at 300 or a little below.
Yeah.
So,
Josephine County's was 354,000.
Wow.
Median price
Josephine
last
County.
week.
Wow.
And Klamath County had a $210,000 one, which was the highest that they've had in some time.
Wow. So it'll be
and sellers are getting roughly 90. Oh, the average of the 3 is around 98.5% of their final list price.
So, and don't you think they're pricing better now? I've noticed that the sellers are doing the price adjustments, or when they come on the market, they are priced more right where the buyers are and the appraisals are. They're right where they need to be.
Yes, and boy, and if you're in that range, in that 250 to 350 range, if you look at the days on the market of those in the last few weeks, they're going off in less than 10 days. That price range is so popular and so much in demand. But look, when you look at it, okay, we know we've got lower number of lock boxes, pending sales have dropped, but the listings continue to come in, And those who are buying are paying almost the full price that sellers are asking.
Well, and
like, God, I don't know if that makes any sense, what we're seeing.
so we're predicting, Guy, that you're going to see some increase in your activity is what we're hoping.
Well, that's good. I'm ready. And actually, people on my side are trying to make it a little bit easier too. I'm just kind of going through a couple of notes that I had here. A couple of the things that they made a little bit tougher on lending. And then there's actually a whole lot more things that they're making it a little bit easier. If you're self-employed, you used to have like 120 days that we would just make sure that your business was up and running, and as long as we had something that was valid within the last 120 days, we were okay. And now we're doing it in the last 10 days of a loan.
Oh, wow.
And as far as like if you're using your assets, like say you're drawing off of your stocks, mutual funds, things like that, we're using 70% of that now, just in case it drops down. So that's a couple of the ones that made things a little bit tougher as far as the self-employed people. But we're definitely getting a lot more appraisal waivers. Or if we have to have an appraisal, they'll just do a drive-by or a desktop one. So that's actually going to help relieve a little bit, because I know these appraisers have been getting backed up, and the couple that I ordered today, we're going to have back by next week, which is kind of nice. I was starting to see those turn times get run up a little bit, but our panel of appraisers are actually getting these things back.
Yeah, that's quick. Really fast. Yeah, that's really fast.
Yeah, and we were doing a verification of your job right at the end. We talked about that a little bit a few minutes ago, where somebody would have to physically talk to somebody at work, and now they're allowing it from an email, as long as it's from a work email from them. Because everybody is working remotely, we can't necessarily catch people on the phone. So we're definitely doing some things to try to make it a little bit easier, because you just can't get a hold of people. As far as tax transcripts on W-2 people, we're waiving those. That's something that we've been verifying ever since the crash.
So what does that mean exactly, waiving tax transcripts?
Back in 2006, 2007, somebody would turn in a set of taxes to their lender, and then they would turn something completely different into the IRS. Not everybody, but it did happen, and that was some of the things they caught when they were auditing some of the loans. So we've been verifying the tax transcripts, and that's been just something that you have to have before you're allowed to close your loan. So those are getting waived, because obviously we can't get those if the IRS is.
Well, right. So, gosh, I didn't think of that. So if the IRS is the IRS working remotely?
Well, we're not. We're fast when they're all there. So God knows what happens working from home. I mean, no offense. I know a bunch of good people that work for the government. Government.
But the point is that you're saying that, once again, you do not have to have your taxes verified to close your loan, at least temporarily. So that's another reason why people might want to jump on getting this done, because it's been, the way's been paved.
Yeah, and I mean, on self-employed people, we're still looking at the verification, and again, we're wanting to make sure. I mean, they're even going as far as sometimes on self-employed people to check for invoices and things that are really up to date, just kind of showing, hey, you are still actually working and functioning. So it feels a little bit tougher on some of the self-employed people and a little bit easier on some of the W-2 people. And we're actually using, I think I mentioned this last time we talked, AI in a lot of our stuff, where we're able to verify your income and assets and everything just from your bank statements, where we're not even doing a lot of the traditional things that a lender has to go through on W-2 people, just because we can see a good consistent auto deposit going into their bank every month. So, we can pretty much look at trends and come up with somebody's income from that. So we're actually waiving.
And that's the reason to go with a larger lender like Mutual of Omaha, because their access to AI, artificial intelligence, and predictive analytics. If you're starting to hear predictive analytics, insurance companies and lenders are starting to use this instead of actually going and doing their verification. It's a very expensive process, but people like Mutual of Omaha have invested in it, and then that makes it easier for your folks at the end.
It really is going to be good for people. And just so everybody knows, we're Mutual of Omaha Mortgage. Even though there is a Mutual of Omaha Insurance, we don't sell insurance around here. I don't think you can get Mutual of Omaha Insurance from somebody within a 300 miles. So just so you know, we only do mortgages. We
Mutual
specialize
Omaha Mortgage.
we do all of our processing right here local. We do everything. All of our local appraisers, we're able to hand pick for our panel. I can't say which one it's going to go to on a given day, but we do have the best appraisers out there on our panel, and they're returning these things quick.
And that's a good reason to go with a local lender, because some of the online lenders, especially in a crisis like this, you won't hear from them. They've got appraisers coming from other parts of Oregon. It can be very sticky. Pete, have you had any experiences with that?
Oh gosh, I would. I think the one thing that I advise pretty much all my client friends is that don't use an online lender, because you're going to end up paying more in costs. You're never going to talk to them. I did a loan with a fella, Alice, and the lender talked to him the first day, and then never talked to them the rest of the time, because they have all these different surrogates. They hire other companies even to do some of their escrows and things, and you never talk to them again.
Oh, no.
It's just an odd. I like having to look at Giles in the face or anybody else and say, you got to help me. And that face-to-face lending, even if it's like this way we're doing it today, I think is better than an online lender. I really do.
Yeah.
It's funny. I had a guy last week that really wanted to do face-to-face. So we did kind of a Sonic deal where I just walked out into the parking lot and he stayed in his truck, and I took his application, and then
At Sonic?
took all of his conditions, brought him in, sat him down, let him season for a day and a half on the counter. And then, and then we picked him up and scanned him in. But, we're getting business done. And I really do like the face-to-face. I don't want to get so impersonal, but we do have all the technology to do it online also. So,
yeah, and why not do a tailgate with a hot dog and sign here? That works.
Absolutely. I've taken a few loan apps on the tailgate of my pickup truck for sure.
Yeah.
I remember forgetting the keys to my truck the office one time, and I pulled in my really old truck, and the lady was looking at me like, I don't know if this is right, but I remember at the closing table, we laughed about it and everybody was happy. So,
well, that's what counts.
get it done.
So I have a question for you guys. Have you had any tenant issues with trying to close some of these loans, and the new state of Oregon Governor Brown guideline to not to not pay your rent, that some of these tenants don't have to pay the rent? So how is that affecting investors?
Well,
We talk about that.
I know that there's some scared ones out there. I have just a couple of rentals, and today's the first. So, I guess it remains to be seen, whether or not, people are going to get paid. But I'm hoping that this forbearance at least, goes forward on to the people that own investment properties. I have a friend that's got about 15 properties, and she's worried that everybody is just not going to pay. And I do believe that they're going to extend that to everybody. So if you're not getting paid, then you're not going to be responsible to have to pay yours right now, which, it could obviously drive up costs for everything, but, we just have to do what needs to be done. If you're not working and it's a choice between, some prescription you need and paying your rent, what do you do?
Well, and a forbearance, for those who are listening, is the ability to talk to the lender and have some kind of a deferment of the payment. And there's different lenders doing different things with that, but it's a way to not pay your mortgage for a little while. Is that correct?
Yeah, and the way I'm understanding it is they will just tack it on to the end. So basically you'd miss a payment. So it's not a big harm or foul, to do it that way, other than the liquidity issues that some of the servicers are dealing with right now.
Well, and we're going to talk more about that as soon as we come back from this break. Alice Lema, Guy Giles, Pete Belcastro here at the Real Estate Show in Oregon. And if you want to catch us on YouTube, we've got 11 years of previous shows that's full of education and some giggles. And you can find that at realestateshoworegon.com. And we'll be right back with more interesting stuff about what's going on with Southern Oregon real estate.
That was 13-3, so you're gonna have to do that one over.
No, Pete will shoot me. He'll come and get that gun out of your drawer and blow me away.
Just go do it again. You're sure.
You guys need to try that one. That one's actually my new toy.
Okay, you ready to go?
So I thought that was 1330. Was that short, Pete?
No, I
Close.
was giving you a hard. I was just making sense.
Oh, okay. All right. Okay, so this is segment 4, last segment. 9 minutes.
I'm gonna not go so detailed on my notes next time because it's just a blur to me right here.
No. It's all good stuff. It's in a
You look
flow. It's
fine,
very
Guy.
interesting. Yeah.
Well, I was hoping to add something, and God,
Well, we're not disappointed. Okay, so 9 minutes even, right, Pete?
Okay.
All right, and 9 minutes in 5, 4, 3, 2, 1. And welcome back to the Real Estate Show. I'm Alice Lema here with Pete Belcastro. We're brokers at John L. Scott, Southern Oregon, and we're here today with Guy Giles, Mutual of Omaha Mortgage, and we're talking about all of the effects of the coronavirus and buying and selling houses and jobs, and what's the effect in our community. So Pete, let's talk a little bit more about how we're getting people to be taking care of their new addendum with the Corona-19 addendum. It's got some interesting things to it.
It does. The bottom line is that if you need to get out of a deal, this addendum will get you out. And you know, it's not that big of a deal, I don't think. It's just part of the way we're having to deal with this. So I'm not afraid of that. You should sign it if an agent brings it to you. It's nothing good. It's nothing fine. I think the bigger issue probably out there is that, you know, that 37% of all homes in the United States do not have a mortgage. Do you know that?
They're free and
37%.
clear. Well,
Now,
and that's post-crash.
Post-crash.
Yeah.
And the other 63%, about over 25% of those have over 50% equity. So this is what's so different about 2008 versus today or any other time we've done this, is that the housing market is pretty strong, and really lenders like Guy have played a great deal in that because the lending has been stricter. Now we're going to go through a whole different time. You talked about rentals last time. If I'm a landlord, I wouldn't do anything right now. I think, you know, the market's not going to be there to buy them right now, I think, for the moment. But right now with renters, I would think that you want to just talk to your landlords and your tenants. Be proactive if you're the landlord and see what's going on.
Well,
Because,
and also,
you know, the
understand
landlord
the
can get
law.
relief too if he doesn't get his money coming into him as well. So
Right.
there are options out there.
Right. But there's a lot of tenants, because I've been getting phone calls because I work with so many investors and we have so many escrows of buildings. And
Okay.
there's tenants that think they just don't have to pay their rent for no reason. And there's
That's
a
not
lot
true.
of rules. It's not true. You have to have letters from your employer. It has to be proven that it was because of the coronavirus, not something else. It's very specific. And then it has to be that the landlord can withstand that financial burden.
Right. And if you're getting unemployment, you know, you're going to get money coming in to pay that. So you get a check into the mail with a stimulus and then unemployment. You can't do that'd be like a triple dipper.
Exactly.
You know?
Exactly.
You
So don't
dip,
just
you
call
get the
up and say,
unemployment, you get this,
yeah.
and you get that. And maybe that's not the way to do it. But
and
certainly if a landlord or a tenant, this is an issue, you need to talk to each other. Don't wait till the end of April and then say, I still owe my April month, I can't pay it. So be proactive in all of it. The same way with your lender. And even the banks, I've noticed that as I go to the banks, or have on their home pages a list of places to call, numbers to call for mortgage relief or this relief or something like that. So the information has slowly come out as businesses are dealing with situation, what is on the ground. And thank goodness they're doing it, because there's thousands of us. We're all in this, we're all in it together, you know,
Mm-hmm.
no matter what.
And we do need to help each other.
Yes.
You know, you're absolutely right. As far as if you're having any kind of an issue, or call your lender. You know, they're and ready to work with you at this point. You know, this is something that everybody's trying to just get together, and this is not the same thing as 2008. You know, as soon as this thing is over, I think there's just a ton of pent up demand right now. We're not sorting through a whole bunch of these mortgage-backed securities are loans that people bundle up that they give to investment people, and then they put that as part of your retirement portfolio. But these loans for years now have been good loans. People that do work, have jobs, and where I don't anticipate any kind of a crash like we, like we had before. And just to say, the tax cuts are still in place. All the things that made our economy, good like it was before this thing hit us are all still there. And
Yeah.
it will not take but a minute for it to turn around. I mean, I feel horrible for the people that are sick or that are worried about being sick, that have lost their jobs, but I've never seen any kind of a federal government jump this fast to do whatever that needs to be done to take care of just the average person. All
Well,
politics
yeah,
aside.
Amazing how
not
fast
being
that
political. Yeah.
It's amazing how fast that actually went, and you're right about that. And we're going to see how that goes, Guy and Alice. And I hope that we're not out of here. Hope we're out of here. The pent-up demand is going to be there. But right now, for buyers anyway, Alice, and even in these times, the amount of inventory coming on right now, we've been low of inventory, for months and months now.
2 years.
So next week on our show, we'll be able to have those stats out and see what marches out there. But you're going to see a large number of inventory. So for some people, the pickings are pretty good right now over a lot of price ranges because of the inventory that's come off that's not been sold yet.
Right. And I can make a strong case for actually putting your house on the market right now. But we have to have a lot of consultation ahead of time so that everybody understands what the protocols are, how to keep the house clean, how the buyers kept their hands in their pocket. The buyers sign documents ahead of time, disclosing that they've not been out of the country, that they've not had a fever. There's just all this stuff that we're doing so that we can practice safe house buying. But because there is so much demand and the interest rates are so low, houses are selling, and it could be the chance of a lifetime to get to your next place if you feel up to dealing with the rigmarole so that it can be done safely.
I'd be really
Now's
curious
probably
if
a
the
perfect
pending
time.
sales and the solds right now as we come through them, are they mostly local people coming onto these things, or are they out of towners? As we've said, Guy's seen that in his business as well. I wonder where they're coming from, because
we see
somebody's getting
out
some good deals. They're going fast. And so right now, even with all the restrictions that are out there, there are opportunities on both the buying and selling side here and the lending side for people who are interested and want to take those steps.
And nobody's going to push you into anything. We're here to educate you. We're here to help. If you want to do something now, we just want you to know there's a way to do it. And we're thinking that this pandemic is more akin to the like an earthquake or a hurricane or something. Like it is an event. It's not like the meltdown we had in 2008, 2010 because of financial instability.
This is worse to a lot of people than then, people losing their jobs.
It is.
Their businesses and the kind of activities going on. So,
but they're predicting a different kind of recovery. Right? Yeah, they're predicting a different recovery.
Well, all of the money is still sitting there. I mean, I watch these things closely, and gold didn't go through the roof. I mean, it's still sitting there, and it's ready to jump right back in the market as soon as we can go. The only difference is you might have to have your kids move schools, because we're just moving, the spring thing back just a tiny bit, but it's all there, and it is a good time to call. Sure.
What's going to happen if the schools don't open again until September? What do we
I'm
do
sure
that
they will be open. It's just, a lot of people that try to move, while their kids are out of school. Hey, maybe this is a good time because your kids are out of school.
Right. Well, and if not, at least it's a good time to clean your gutters and trim your trees and, caulk your bathtub.
And don't you think people are I think people are doing a lot of that. Go into Home Depot or something and see how many people are buying things all masked and staying away from each other, buying things to do their own project with their house to make their house better. Yeah. I love that. That's a great way to spend this time.
It is.
Make your house better.
It is. It is. Well, thank you, Guy Giles of Mutual Omaha Mortgage. We appreciate your input and your steadiness. How will people get a hold of you if they want some more help?
Well, my cell phone number is 541-944-6987. You could obviously Google me, but you could also call, Alice or Pete here if you just have some suggestions on getting your house ready to sell. So they have some good ideas.
Yep, and if you want to buy something. So thank you, Pete. Appreciate you. We'll see you guys next week.
Yeah, good luck, Guy, too. We'll see you soon.
Hey, thank you.
Bye now.
Bye.